Some big surprises out of the auto industry today as the major automakers release second quarter sales numbers. Phil LeBeau joins us now from Chicago with the details there on how healthy America's auto market is. Phil.
These were pretty ugly numbers, Don, but we knew they would be ugly numbers. Remember, you had most of the industry shut down anywhere between 6 and 8 weeks, depending on where the plant was. And what we're talking about here are the sales from the manufacturing plant to the dealerships. Now we're talking about, this is not you and I going out to dealerships, but look at these numbers. Nissan down almost 50% in the second quarter. There you see Fiat, Chrysler, GM, and Honda. None of these numbers are anything worth writing home about. In terms of General Motors, we should point out that the retail sales for GM, those are the ones that really did a little bit better than expected, down just 24%. Fleet market, rental car companies, some of the other firms, government agencies, they're dead right now. And that's not just GM, that's with everybody. This is what we're looking at in terms of annual sales. Now, the estimate for the full year has been $15.5 million. For the second quarter, the estimate is going to be closer to a pace of 13.3 million vehicles. One automaker we have not heard from yet is Ford. We will get those numbers tomorrow morning. And when you look at Ford, keep in mind that much like GM and like Fiat, Chrysler, really all the automakers, it was shut down about 6-7 weeks. So its sales will be impacted. Don't expect great numbers from them as well.
All right, Phil LeBeau with the latest on the auto numbers. They are not looking good, as you pointed out there. We appreciate the update. Karen, what exactly do you make of the numbers? Phil points it out very well. We knew they were going to be bad. Was this more or less bad in your mind than what you thought it would be?
Right. Well, we knew they were going to be bad, and they delivered on that promise. And, I don't know that it was any much worse than I would have expected. I own GM, which has been terrible this year. There was a few bright spots for them and for some others. The truck business is still a really good business, high margin. But, when you're shut down for that long and you have those kind of fixed costs to absorb, it's going to be, the earnings are going to be terrible. This is just car sales. But I'm sort of more optimistic that there will be a rebound. I do think there is a sort of post-COVID story of people not wanting to take public transportation, not wanting to drive and wanting their own cars. So this stock, for me, GM has not worked, and they suspended their dividend, which was the right thing to do. But I am still long. It's sort of my pain trade, I guess.
All right.
So I don't know how long, but I've been in it a while.
All right. I mean, this is a pain trade for sure. We just showed a board of the intraday action today. They were all down. I mean, Guy Adami, I'll turn to you for this one here. Is there any of those companies, whether it's GM, Fiat Chrysler, Toyota, any of those guys, legacy automakers, that actually resonate with you right now that you'd want to own?
No. In a word. I mean, but it's something we've said for a while. I mean, you think about it, and, the stock market is within a whisper of an all-time high effectively. And GM, in a decade where it's never been a better environment, the stock couldn't get out of its own way. And the same thing with Ford. I don't find any real compelling reasons to be long those stocks. We said it for a while. CarMax, on the other hand, is fascinating. Topped out at 103 in February, traded down to 37 in a straight line, and then went right back to 103. So you have a huge double top. You're looking for an opportunity to buy this stock again. That's where you want to look in names like this. I think that's where the beta is, and that's where the upside is. I still think there's a little room to the downside in CarMax, but KMX should be on everybody's radar screen, in my opinion.